Alright traders, let's talk about gold, because things are getting wild out there. The markets are buzzing and gold is right at the center of the action. Whether you're a seasoned trader or just starting out, you can't ignore what's happening with the yellow metal right now. With the US launching airstrikes on Iran and the whole Middle East situation on edge, everyone's expecting gold to go crazy and pump, right? That's classic market logic. Conflict ramps up, investors rush into safe haven assets like gold. It's almost like a knee-jerk reaction. Whenever there's geopolitical tension, gold is the first thing people look at for protection. The headlines are dramatic, and the fear in the market is real. But hold your horses. I'm actually seeing something very different on the charts. While the news is loud, the price action is quietly telling a different story. And as traders, we know that price action always speaks louder than headlines. Here's why. If you zoom out and check gold's daily time frame, there's a clear triple top formation. Now if you're new to chart patterns, a triple top is like gold hitting its head on the ceiling 3 times. It's a strong bearish signal, and historically it's meant trouble for further upside. This isn't just a random pattern, it's a classic sign that buyers are running out of steam. Every time gold tries to break higher, it gets rejected at the same level, showing that sellers are stepping in hard. So, while the headlines are screaming for a gold pump, the price action is telling me the opposite. I'm not just talking, I'm trading this view. Right now, I'm short on gold from $3,365, stop loss at $3,390, and I'm targeting $3,310. This isn't just a hunch, it's a trade based on a clear technical setup. I'm putting my money where my mouth is, and I want you to see exactly how I'm managing this position. Let me break that down. If you're selling from $3,365 and you keep your risk tight above the highs at $3,390, your potential reward is much bigger than your risk. That's exactly the type of setup I like. Clear pattern, clear risk, and a logical target. It's all about stacking the odds in your favor. If you're disciplined with your entries and exits, you don't need to be right every time, you just need to manage your risk and let the probabilities play out. But there's another twist. Lately there's been an inverse correlation between gold and Bitcoin, so if Bitcoin rallies today, it signals risk on, money flowing into riskier assets and out of safe havens like gold. If that happens, I expect gold to dump even harder. This relationship isn't set in stone, but it's been showing up more and more in recent months. So if you're trading gold, you can't ignore what's happening in the crypto space. Now, don't get me wrong, geopolitical events can cause wild moves and big surprises. Risk management is key. I always use a stop loss, and so should you. No matter how confident you are in your analysis, the market can always throw a curveball. Protect your capital first, and let the trades take care of themselves. That's how you survive in this game for the long run. So, to recap, everyone expects gold to pump, but the triple top and the Bitcoin setup are giving me strong, bearish vibes. I'm short, and I'm watching both gold and Bitcoin closely as the New York session opens. The next few hours could be crucial, and I'll be glued to the charts to see how this plays out. Remember, trading isn't about following the crowd, it's about reading the market and making your own calls. Let me know in the comments, are you with the crowd, or do you see what I see? Smash that like if you enjoy these quick trade breakdowns, and stay sharp out there. Your feedback helps me bring you more of the content you want, so don't be shy. Drop your thoughts below and let's get a conversation going. Trade safe, and I'll catch you at the next move. Stay disciplined, stay curious, and remember, there's always another opportunity around the corner.